Does stock picking matter, or is asset allocation the secret to consistent portfolio returns? Joining us today from Toronto is AGF Management Limited's CEO and CIO, Kevin McCready. Kevin, welcome to the show.
Sybil, great to be here.
So Kevin, before we jump into the asset allocation 60-40 mix, and is that right for you, what is asset allocation?
So think of it this way. Asset allocation is just how you mix up the ingredients to make your recipe, right? So if we're at home cooking, you want a little bit of this, a little bit of that. Some of it's too spicy, some of it could be too sweet. So it's the combination of things we put together that create a portfolio, right? So when we think about it, it's stocks, it's bonds, and then we can break that down even further. What type of bonds do you want? What type of stocks do you want? What type of things work well together? What type of things may work differently? Right, so how they correlate is also important. So it's really how we take the different financial instruments that are available to us and put them together in a way that gives a client the best outcome for return with the least amount of risk. And that's really what we're trying to achieve when we think about that word asset allocation, taking those pieces and putting them together into a portfolio that we can make tactical adjustments, maybe a little more sugar, maybe a little more spice.
And of course, it's going to be different depending on each client's unique situation, their risk tolerance, and what their goals and objectives are with the portfolio.
And that's where life comes into this, right?
Yeah.
You know, if you were investing for a 2-year-old, you could say, I can take all the spice I want, right? I can take all the market volatility I want because that child isn't going to really need that money for such a long time in the future.
Just don't give them chocolate or it'll be gone.
But versus someone who is in their later years, right, who is depending on taking an income stream off that portfolio, they don't want to be pulling money out when the market's down. So we think very differently about the recipes that we use, if you will, for that mix depending upon where someone is in their life, really.
Now, you've spent your entire career in the portfolio management world, and I won't tell our viewers how long that's been. But what are some of the things that have surprised you the most over the years?
So I guess when I look back at it, right, what I have learned is, and I have been in the industry a long time, I sat off my first trading desk in 1987, right? So I saw something that terrified me about this industry.
And for those viewers who don't know the history, 1987 was the big crash. What was that like?
Yeah, so you had, we saw a mini version of it, you know, in March of 20, which was when, you know, the bottom during COVID. But we had securities going down 20, 30%, you know, in minutes, and the market was wiped out 30% in a day. And this went on for 2 days, right, to the point where we didn't think things were going to come back. That was probably the greatest crash we had seen since the 30s in the markets. But what I learned over those years from all those different events, right, this is the longest apprenticeship in life. You're always learning. Every day I learn something new. And one of the fascinating things about this industry is you end up becoming a mini expert in everything at the time. So in more recent times, if you go back to March of 20, we didn't know anything. We knew a little bit about immunology and other things, but we became many experts in vaccinations, trials, right? Some of the things that we thought about the reproductive rate of a virus.
And who knew?
Right. But you go all the way back through time, whether it be when there was an oil disaster in the Gulf of Mexico, if many remember that, where we all of a sudden had to figure out where currents were going to go and where to destroy the economy of the Southeast United States, which was dependent upon tourism. Or the Greek bond crisis, right, when they were on the brink of default, and we had to understand in this industry, what did Greek parliamentary politics play into this, and how were they going to get, you know, resolved from the European Central Bank. So you become over time this wealth of a maybe skin deep, but about a lot of things, and you never know enough. But you have to make decisions with imperfect information. But it's a fascinating industry because of the fact that you have to literally learn every day.
You do, and there's one learning that applies over all those situations you just described, and that is the markets always recover at the end of the day. They keep moving forward. So let's talk a little bit about the right asset allocation, because for so many years, the average investor thinks 60-40. I should have 60% of my money in stocks and 40% of my money in bonds, and just set and forget. Does that still apply today, and is that really suitable for everybody?
Yeah, the answer to that is pretty simple. It's no. It doesn't hold true. If you left it there every year and didn't do anything about it, it would have very different outcomes. If you think about it, it always is where you're starting from. You know, the 90s people reference was a great year for stocks. It was. But the 60/40 portfolio did really well. It earned about 13%. But people forget it wasn't just a stock piece. It was that fact that the treasury yields were 6.4%. So as we think about the decade ahead, you have to say, where are we starting from? Where are valuations on equities? You probably won't have a 16% compounded return over this decade. And the fact where bond yields are starting from, they're not as high as they were in the 90s. And as they move higher, it will dent the principal. So, it really does depend on where you're starting from. So, and it is not right for everybody. It depends on where you are in your life and how you're going to have to mix up and get that return for the 40%, I think, is going to be the hard part here.
And the good news is investors don't have to decide on their own. They can ask a professional, work with a financial advisor to find the right asset mix for them. I understand that at agf.com, there's a lot more resources available on asset allocation that our viewers can have a look at. And Kevin, thank you so much for sharing your experience with us today.
Always good to be here, Sybil. Thank you.